So after a few months of kind of doing nothing, I was like, I don't know, what can I do that will give me the freedom that I can have some autonomy over my schedule? And I was like, maybe real estate's it.
It's a pleasure for me to introduce Mr. Paul Williams. Paul has a really cool background. He started single family real estate as a college student, trying to make passive income like a lot of us. I know a lot of us wish we started earlier, but Paul got in early and just had it as a hobby for a long time until 2016 when he went full time. He's flipped over 80 homes, several office retail properties, developed land, built new homes. Before real estate, he even managed a nationwide trucking business, which is crazy to me. Offices in 7 states, which he exited to go full time in real estate. 25 years in the business, 10 years full time, about 12 years doing commercial real estate, and in total assets over 187 million as a sole owner, JV, KP, GP, and over 300 million if you include LP investments. So he's been around the block a time or two, and 63 million managing directly AUM, over 100 million in additional GP deals, a couple of multifamily office buildings, parcel of commercial acreage that he's working with now. Has personally raised over 5 million, but I know that he has connected a lot more capital than that, bringing in other capital raisers to supplement the raise, which he is pretty good at. So welcome, Paul. Good to see you.
Yeah, thanks for having me. And it's good to see a lot of friends, some of whom I've known for a long time. So yeah, it's great to be on.
Yeah, we got halfway through the intros and we have half the call hyping you up. So you have some friends here. So really good to see. I wanted you to briefly go over your business model and what you've been doing the last few years, since I know you went full time about 10 years ago. So what are you working on right now, and give the audience a overview of your business model.
Yeah, so I tried out a variety of different things, and I still have my hands in a few things that I've slowly been exiting out of some of the single family. I've got some commercial infill acreage in DFW. I've got some larger tract acreage in Austin area where I live. A few single family still, office building, but my focus is really value add multifamily in Texas, Georgia, and Indiana. So yeah, I guess in a lot of things, but that's my focus area.
Gotcha. You in Georgia, Texas, and then Indiana. Are you from
Yep.
Indiana, or why
Yep.
Indiana?
Nope. So I went to a very small college in Indiana. I've born and raised in Houston. Went up to college in Indiana, a place called Hiles Anderson College, which I'd be surprised if anybody here has heard of it. Lived up there for a long time. Started buying and flipping houses as a high school teacher. I taught business and Spanish, and then I started my trucking and logistics company in 2006. Bought more real estate while I was running that. And then so I've always been a real estate guy, even going back to college days.
Yeah. And so
Yeah.
obviously, like a lot of us, you started out doing this passively, doing flipping houses and things like that. What motivated you to go full time 10 years ago and pursue multifamily commercial real estate?
I had an opportunity to exit my logistics company. And so I took that, sold it off. And for a brief time, I say that I retired, sat at home with nothing to do, wife and four kids. And it's just so strange, wake up in the morning with nothing to do at all. Just wake up when I want to, get coffee, mill around the house, poke around in the garage, take some vacations. So I was like, man, I want to do something. I kind of like real estate. I've done a bunch of real estate, and but when I left my trucking company, I think I had two commercial properties and seven or eight single families, which was basically all debt free. So after a few months of kind of doing nothing, I was like, I don't know, what can I do that will give me the freedom that I can have some autonomy over my schedule? And I was like, maybe real estate's it. And so I kind of kicked it into gear with real estate. And that's when I got into doing a bunch of deals a year. And when I was doing 20 flips a year. So I was buying a house and hopefully selling a house every 2 weeks. And it was just so much work. And a lot of these I was doing remotely, either remote ground up construction builds or remote flips. I was living in Austin area and flipping homes in Indiana that I never saw, never visited, other than maybe on a video call. So when I was doing like flips per year, I was like, man, there's got to be a better way. I ran into a guy that owned over 400 units, and I was like, wow, that's amazing. It'll take me years, decades to get there with what I'm doing now. Because I'd flip a few houses, buy another one cash, flip a few more houses, buy another one cash. And so I was like, how'd you do it? And he's 10 years before, he was in the early to mid 2000s. I went through this program, RE Mentor, and they told me how to do it. So I was like, okay, Googled RE Mentor. I was like, okay, how do I get in to do this? And I was like, when's the next event? And so I went to that, but it was all driven by, it was so much work flipping so many houses per year and managing one rental here and one rental here and a portfolio of rentals all over the place. So for me, it was just driven by looking for an easier, lazier way to accomplish the same thing, but at a bigger scale.
Yeah. I think many of us who came from single family, it's my favorite whenever someone says, "Oh, I'm trying to get from single family to multifamily." It's the day you stop doing deals, the day you stop making money. Unless you want to manage a bunch of rentals, right? If you're doing flips, it's just never ending. You do a flip, oh, cool, I'm done, but now I don't have any passive income coming in. So that's why I think a lot of us made the jump here. And I know you mentioned Dave and Ari Mentor. I know a lot of people here have been through the same thing. So aside from Ari Mentor, how did you acquire those skills and knowledge? Did you have a mentor or coach outside of what you had with Ari Mentor, or was it just the coaches with Dave that really showed you the way?
Yeah, it was the coaches with Dave that kind of showed me the way. But I think it was along the way you meet different people, either at Ultimate Partnering or just people in the business. And there's a lot of people that are kind enough to show the ropes. And I think one good learning experience that Colm mentioned a little bit earlier was that I was approached, I got an unsolicited offer to look at and evaluate multifamily properties for a pretty big, almost institutional size owner. And that was a really cool learning experience. And I provided a lot of value. But yeah, you just pick up people along the way that are kind enough to share their time. And of course, the coaching was a big part of what I did. Part of the reason the coaching was such a big part of it was I paid so much money. I'm like, I'm not going to quit. I put in so much money. I got to get my return
Mhm.
on it. And so I think that's what helped me stay in the game is just that I put a bunch of money down to.
You would be surprised, not just Ari Mentor or the Alliance or other masterminds I've been in and Tim has been in. Be surprised how many people will pay this money and then they're not getting their money's worth. Hey, you paid to be here. Use all of it, right?
Yeah,
And I think
yeah,
that really is the difference between the people who sign up for a mastermind or a coaching program just to be in it versus the people who are there to actually use every bit of knowledge they paid for, right? And those people are the people that are on this call, right?
yeah.
And I know that a lot of what you're best at is connecting capital, but I'm curious, your first capital raise that you went on when you had to go raise 500 million or 500,000, not 500 million, 500,000 million bucks. What was that like? What kind of challenges did you run into on your first capital raise and how did you overcome them?
I've been getting all this learning and being on the coaching calls and being in the groups and I felt like I could give a lecture on investing in multifamily, even though I had only been an LP up until that point. And so it was interesting the first capital raise. It's, oh wait, this is real. I've got a chance to surprisingly, it was pretty easy. Now I only raised, I don't remember, it was 350,000 or something like that. But I got GP. And I just called up friends and family. Of course, a lot of people knew that I was full-time in real estate and had some success in my logistics company. And I just called and texted people, and they're like, "Yeah, sure, I'm in." So I really didn't have any challenges on that first raise. They haven't all been like that, but
Yeah,
but
that's
yeah.
it's perfect segue to my next question, which is, I guess, two part. How much harder is it now when obviously that friends and family, that first 500 grand or $1 million for most people isn't really that hard because it's people that already like you and know you and trust you, right? But after that is where people hit a wall. So how hard was that after you exhausted the family and friends? And also, how do you see capital raising? How much different do you see it now versus when you first started? Because even in the last 5 or 6 years, I think most people will agree, raising money is a lot different now than it was, especially back in 16, 17. So have you seen it evolve?
Yeah. So I started raising capital before the whole 2020 bubble and all that. But it was surprising how easy it was when the deals were at their worst, when everybody was getting bridge debt
Yeah.
and I'm sure some of you saw this, but me and Colm saw, a principal of a pretty big group offering sometimes 10 to 20% more than what the deal was worth. And investors were just throwing money in.
Hmm.
And I was giving a lot of pushback, guys, like you can't be buying these deals. So yeah, I was doing my own deals, but then I had this big group call me and they're like, hey, can you be our boots on the ground guy for Texas. We'll pay you a full salary. You just go look at deals a few days a month. And I'm like, I'm not looking for a job, but full salary for 3 days a month. All right, sign me up. And so it was a really cool learning experience, but being on the acquisitions team and chiming in and things like that. But then when I would see them underwriting at a four cap exit, because that's the only way it worked. But the strange thing is investors were all throwing their money in. And when now that terrible time is over and a lot of people got hurt, and I wasn't doing a lot of deals during that frenzy. Now that the deals are like actually good, it's a lot harder to raise money because now people are they're licking their wounds, they're sitting on the sidelines waiting to see what's going to happen. And I think a lot of people are missing a really fantastic buying opportunity, like 2012, where I was buying deals cautiously and only with cash, but I didn't know it was like such a great time to buy. And I think now we're in another time that's a really great time to buy, but it's harder to raise capital just because people are recalling what happened over the last 3, 4, 5 years.
Absolutely. And I think a big piece of that is credibility, right? The deal being good isn't enough anymore, right? The deal being good because everyone has a good deal on paper, right? And so what are some ways that you implement to try to establish credibility with both capital LPs and both other co-GPs or fund managers that you're trying to bring into these deals? What are some ways that you try to establish credibility with them?
It's easier now that I have a long track record because I could just say, look at my track record and look at the average returns, look at the best and the worst, and that's no indication of future, but it'll give you an idea of how I think and how I operate and how I operated during the pretty challenging time over the last few years. When I first started out and I was raising for other people and doing my deals with that I could only do with an experienced operator, that's when I would lean on them for their credibility to establish that. Yeah, so I guess his track record now and previously I would rely on whoever I was working with.
So leveraging the sponsor over, because obviously when you're new, you don't have that track record, so you have to leverage who you're around, which is something that Tim speaks on a lot. Like when we go do fund to funds, leverage that sponsor because they know what they're doing, right? And I'm
Yeah.
working for them, so it's an
Yeah,
easier route to go.
and I guess as far as having the credibility with capital raisers, a lot of it is just continually going to the different meetings. The RE Mentor, I've been going to that since for 10 years now. And one person, one time, and it's not going to go anywhere. But after I've been seeing some of these people 3, 4, 5, 8, 10 years, then they're like, okay, I've seen Paul around. He keeps doing deals. He keeps doing good deals. So I'll raise money for him or whatever.
Consistency. Yeah.
Yeah, just hanging around, just staying
Mhm.
in the game.
Yeah. And when it comes to the LPs, what are some methods? Like, what's your go-to for finding and attracting new LPs into the deals you're trying to do? Is it mostly social media, meeting people at events? What do you think your best way to attract investors is?
I keep having investors. One way that I never really expected to get investors was like I'll post these little informational little videos. A lot of times I'll be just driving somewhere, or sometimes I'll just leave. I'll be like, oh, I want to do a video. And I'll just drive to some random apartment complex and be like, hey, I'm here at a value add apartment complex in Texas, and this is what to look for, or something like that. And surprisingly, I'll get a few thumbs up or whatever, but I'll have people that I haven't talked to in 10 or 20 years. They'll message me. In fact, I had it recently. One of my students that I taught in 2006, he messaged me. I haven't talked to him in 20 years. And he's, hey, I see you're always doing deals. I've got $200,000 to invest. What should I do with it? I was like, put 100 in this deal of mine and 100 in this deal. And he's okay, done. So I have a lot of indirect success from that. And then, of course, going to events, meeting people, shaking hands, kissing babies, whatever is always a good way.
So more organic then,
Yeah, it's more
say.
organic. I wish I have built a more sophisticated, robust CRM, the drip campaigns, all that. And maybe I need to go back to school to learn that part of
Mhm.
it. So, and
Need to get on a call with
I'm glad you
Tim.
guys are focused on that. Yeah, I'm glad you
Yeah,
guys are
yeah.
focused on that because really what you guys are teaching is the best way to get into doing deals. I think I took the hardest way to do it, and you guys are teaching the easiest way to get in. Raise capital for some deals, learn as you go and get some GP and acquisition fees as you go along. And then as you get that experience and you've already been a part of 3 or 5 or 10 deals or whatever, then maybe at that point you've learned what to do, what not to do, what to look for in a deal, what investor appetite is going to be, and then maybe you're ready for that. And I'll just say that I'm really glad that I didn't have the success that I wanted to have starting out, because I probably would have hurt a lot of people and lost a lot of money, not just from not knowing all the pitfalls.
Hmm.
So if it's
Yep.
taking you a long time, then it's part of the process, it's part of the journey. And if you could go as fast as you want, you'd probably lose a lot of people's money. So just be patient, put in the time, put in the reps, learn, race for some deals, and learn what to do and what not to do.
Yeah, being a GP, it's not easy, especially in 2026. It's a lot harder to go from A to Z than it was, especially pre-COVID, and then the rate hikes and everything else. So, what Tim's been preaching, I obviously wholeheartedly agree with. Raise money as either fund manager or co-GP even, and learn the business, learn from the big boys, and then go do your own deal and not because some people do become victims of success too quickly. They do one deal, it goes easily. They raise money from friends and family. Oh, I raised 500 grand for my friends and family. That means I can easily raise 1.5 million, find another deal, and all of a sudden the cracks start to show, and you didn't know as much as you thought you did. So I really like that take from you on, hey, I'm glad I wasn't ultra successful early because it might have hurt me more than it helped me in the long run, which I don't think enough people think about, right? And so obviously your marketing is more organic. Do you have any kind of you do any kind of paid ads or any kind of marketing system you've used, or it's all just shoot a video and post it?
Yeah, it's all organic. And a lot of the funds that I've raised, I've done a lot of friends and family, but a lot of what I've done is calling other capital raisers, hey, I've got a deal. Do you want to raise for it? And
Mhm.
then I focus on the operational and things like that. And so I've never, although I think it would really be like a natural, I don't know, a kind of a natural gifted area for me. It's not something I focused on, and I need to do that.
Gotcha. That's an interesting point because most people that we have on the show are mostly raising more of their own capital. Obviously, if they're a GP, they've connected some co-GPs and fund of funds as well. But I'm curious, when you're trying to find capital raisers specifically for a deal instead of LPs, what are some things that they look for that you have to sell them on, right? Because most people, they know what an investor wants, good returns, a stable operator, but what is the difference in trying to get a co-GP or a fund manager into a deal versus an LP? What do they want?
That's a good question. I think generally the capital raisers they want to know, like, it's not like a one-time conversation. It's not like you meet up once at an event and then they're like, sign me up for the next raise. A lot of times it's a slow process where we have a call, we meet at an event, we meet at an event 3 months later. I have different calls, we'll send them a deal that they pass on, and a lot of times it's maybe a year or more before they're ready to. I think part of that's just getting comfortable with me, my process, learning how I think and operate. So whereas an LP, a lot of times it's like they know me, here's a deal that looks good. And a lot of investors, and maybe they're getting better than they used to be, but a lot of investors, they'll just look at the bottom line. What's the return?
Hmm.
Oh, this one's 21%, yours is only 18. I'm going with the 21. And unfortunately, a lot of times it's how many deals has that 21% done? Oh, they've done zero, and this is in like the worst part of the city and a declining population with $20,000 incomes. And so LPs are a
And
lot,
yeah,
yeah, a lot
that's where
LPs are
investor
like,
education comes in, right? Having
yeah,
to educate your investors on why the better return is not always on paper. It's not always necessarily better for them in the long run.
yeah, yeah. Anybody can put any numbers down, but can you perform?
Okay. And both for your LPs and your capital raisers, with right now, multifamily is a debated topic. Do your investors and capital raisers, do they prefer a single asset type right now or diversified across? Because I know you're doing a few different things, right? You have the multifamily, office space, commercial acreage. Is there something that they prefer right now?
I've only syndicated the multifamily, the commercial acreage and stuff and I just own that myself. So I've never pitched any other deals, and sometimes people have approached me to partner with them on a office or a car wash or hotel or whatever, mobile home park, and I'm just those are great asset classes, but I want to be the known as I'm the multifamily guy. That's all I do. And
Gotcha.
some people are diversified, and that's great. I don't have any problem with that. So I don't know how my investors would think. Like in my mind, they would be like, "You're the multifamily guy. Why? What do you know about industrial or whatever, self-storage?" So I guess I've never
Gotcha.
asked them.
When they're comfortable in one asset type, it would be difficult to. I like to ask to see if operators and sponsors and things have thought about venturing out outside of multifamily when that's their main focus because of how volatile for investors it is. Even if you're good at what you do, you have a good process, you have good deals, a lot of them got burned in the last few years. So I'm just curious if there's any sentiment from them that they're maybe looking at another, hey, do you do any kind of self-storage or that
Yeah, I
that
haven't
kind of voice in the back of their head.
Yeah, I had any of my investors ask for different asset classes, just other operators, and I'm always a pass on that just because I don't know it and I want to be known as the multifamily guy. That's what I
Gotcha.
do. Yeah.
Gotcha. And so with your investors, do you do anything special to cultivate and maintain long-term relationships? I love to ask this question because I've had some hilarious answers. Do you do newsletters, direct mail, send them like birthday cards, bottles of wine, gift cards? Do you do anything like that for your investors?
I wish I could say I do all of the above. I do like to follow up with investors. A lot of times it's, oh, I wonder how Fly's doing today. Let me shoot him a text or give him it's been a while. I'll just pick up the phone and give him a call. So a lot of it is like unstructured and unwarranted. I have been trying lately to not call investors just every time I have a deal, but just call them, hey, David, how you doing? How's the family? How's your daughter got a job teaching school in Austin? How's that going? And not even bring up a deal or any of the deals that they're invested in or any deals that I'm working on. And so I think that's one thing that can be missing for a lot of capital raisers is like it's been so easy to raise capital with once people started figuring out like go high level and CRMs and the drip campaigns and having the free book that gets people into newsletter and things, and those are all great. I think a lot of people have missed the personal touch, and so I think some of it's coming back to where investors are really appreciating the personal touch. So I think some people on the call might could benefit from having a more personal touch. I could definitely benefit from having a more structured campaign.
It's worked pretty well so far, but everyone has room for improvement. So definitely something to look at. And that I was going to ask you as well. Do you, so I know everyone does it differently. It sounds like so far you just reach out as you get deals, but have you ever considered or done seeding a deal comes across your desk today? You know you won't have PSA or anything for a couple of months. Do you kind of drop the seed of, hey, I'm looking at this deal. Is this something you would be interested in if I took it down? Or co-GPs, if there was an opportunity to come in and raise, would you be interested, like ensuring you have funds before the capital raise
Yeah.
starts? Do you do anything like
Yeah,
that?
I do that, and that seems to work really well because a lot of people I think are being more cautious now than they were 3, 4, 5 years ago. And so for me to tell them, hey, I'm very early in the process on this. We'll see where it goes, but it's looking really interesting. Do you want any more info? And usually they're calling me back 3 or 4 weeks later. Hey, what's going on with that Dallas deal you were looking at? And then I'll be like, man, we're still negotiating this or that. And so then when it comes down to the capital raise, then they're like just really chomping at the bit. I've got about 4 people that are like really chomping at the bit to raise for my next deal. So I'm hoping something breaks loose soon, which I think could be this week. So yeah, I do try to plant the seeds because it makes it so much easier when I actually have the deal.
Yeah. And the way I got that question from is Michael Guthrie, one of the mentors in our alliance, very good capital raiser. He tells people when we have these events and things, he goes on stage, so you should be polling your audience every 30, 60, 90 days and just ask them, what do you want? What are you looking for? I'm looking at deals in Houston, Class A. Is this something you would want? Because at the end of the day, we need to serve our investors, not ourselves. If we like a deal, but our investors don't, what's the point? Instead of trying to force feed it to them. So polling the audience and asking them, checking in with them, hey, I'm looking at this. Is this something you'd like? I think that's something everyone could benefit from doing, even though it does take more time, right? The personal touch, like you talked about, takes more time out of your day, but it could be well worth it in the long run. I definitely like that answer. And obviously, we all love to make money and do deals, but have you ever faced a situation with a capital call where you lost money on a deal? And if you did, how did you and your team navigate through that?
So I've never had to do a capital call, which I'm really thankful for. I've had a few deals that I invested as LP that have not gone or are not currently going well. But yeah, unfortunately, I've never had to do that. No capital calls.
As an LP, does that really change the way you underwrite and do different deals?
Yeah, I think so. I've been doing commercial real estate for 12 years and I'm still learning new stuff all the time. Whether it's why there's always new things I'm learning. And yeah, and I think the thing that I've learned from just going through some properties that one just had a capital call and the other one I've been in for more than 10 years and it'll pay distributions for a year or so and then it'll stop paying distributions for a couple of years and then they'll start it again and they've refied it 3 times now and but I think the main thing is just getting the communication. It's just really frustrating when you have no idea what's going on and you just can't get answers, you can't get K1s, you can't get this or that. And so I think that's just told me that if things aren't going as planned, if we have to cut distributions, then just more communication better is better.
Gotcha. Do you think that everyone who wants to be a GP should be an LP first to see what it's like for the investor?
For me, it was a good experience.
Yeah.
And for me, I think the training that you guys provide now is so much better than it was when I went through because I was trying to do everything all by myself with just a 30-minute call with a coach, whatever it was, every week or every 2 weeks or something like that. So for me, it was a really good thing. And I think it gave me some extra credibility because I was always talking about my deals, even though I was LP in the deal. Everywhere I'd go, I'm talking about I was in 4 different LP deals, got into them quick. I was trying to do my own deals for a whole year and I wasn't getting any traction. Part of it was I was just scared of the process and it was overwhelming. But when I got in as LP and everywhere I was going, I was talking about them, I was posting about them on Facebook. Then when I got my actual first deal, then people already figured that I was the multifamily guy always doing
Mhm.
deals. It was
Yeah.
all LP.
Hey, it's in the name. You are a partner, even if you're a limited
Yeah,
partner. You
that's
know, when
right.
you see
Yeah, and
people on LinkedIn boasting their 10,000 units, a lot of those are LP units too. So I think that you are learning the business, especially if you're an
yeah,
involved LP and you're asking more questions than the average investor. You're learning a lot, even if you're not on the team, so to say.
yeah, I think it's one thing that can give you instant credibility.
Yeah.
You figure out what's the minimum you can invest in a deal and get LP. If you can go straight to the GP, fantastic, go for it. But if you've got a little bit of money, you've got 50 grand or 100 grand or half a million or whatever that you can put into LP deals, that can be a great way to figure out if that's an operator you want to work with. So there's some great operators on the call. And you could be like, let me put in 50K with this guy and with this person, or less if you can. And then maybe that's your next, maybe that person is going to be your next sponsor. And maybe you'll find, I really don't like working with that person, but I really connected with this sponsor. And then when you have your deal, like, hey, I've invested with you before. Would you look at sponsoring this deal for me? Or can I raise capital for you? Because I really like how you operate. And I think you'll get that insight as an LP as to their communication, their can they perform the way they underwrote and things like that. So I think if you can, I think it's a great way to kind of get in.
Yeah, I think that's really good advice. And if you can't get in, find people who are LPs of that sponsor and talk to them and say, you gave them 50 grand. What's it been like for you? And you'll almost always get a pretty truthful response, one way or the other. I don't think people mince words if they give someone 50 grand and they didn't do a good job with it, and vice versa. If they're really happy and the communication's fantastic. So there's many ways to figure out if a sponsor is worthwhile, even if you don't have the 50 grand to invest or the 100,000 or whatever it is. And I'm
Yeah,
curious,
and
have you
I'll
ever?
say one more thing about that. And let's just say that you've got 200,000. Instead of putting it with one sponsor, split it among many. And if somebody tells you that the minimum is whatever they tell you the minimum is, it's probably half of that. Let's say that you only have 50 grand to invest. Go find a deal with a sponsor you think you like and trust. And hey, what's the minimum? 50,000. Will you take 25? The answer 99% of the time is going to be yes. And then you can put your money into 2 different deals, learn 2 different sponsors. And then that's also for your resume. Yeah, I did this deal in Atlanta, I did this deal in Austin, and that's all part of your credibility. that'll help you later as you're raising money.
Yeah, I really like that. Which is a Tim. I use this story all the time now, but Tim had an investor, wrote him a $50,000 check, and recently wrote him over $1 million check because even the big check writers, they're gonna start small, right? Maybe they give you 25 grand, and you're like, I know this guy has way more money. They're testing the waters because they want to see, is this guy gonna perform, instead of going all in just to get the better class share, right? Just to say I invested this much money. You're still an LP, you still don't control the deal, so why not mitigate risk? So I really like that answer. And I'm curious, did you ever think about doing a fund? And if not, it sounds like you've never done a fund. I'm just curious why you haven't considered it.
Actually, the first deal I did was a fund.
Oh,
And so, yeah, I just did the fund the one time. I think it can be a great vehicle. I just haven't done it again.
any reason why, or you just prefer syndication?
The syndication has been really easy and I've gotten really comfortable with it. And so I've just always stuck with it. When I was helping out with the bigger company that was doing a lot of deals, it was really interesting when they started a fund and they didn't check with their investors, and a lot of the investors were pushing back on it. A lot of the investors would put $100,000 into each deal that they did. And so when they rolled out this fund, which they were going to buy 5 properties, instead of the investors putting in $100,000 into each one of those 5 deals, they just put 100,000 into the fund and they're like, I'm good. And so it was actually a lot harder for them to raise the money, as much money as they wanted to because of that. Or investors were like, I don't want to invest because I don't know what's going into the fund, or they didn't like one particular deal. Having said that, I know a lot of people do funds and they work great. So that just not my thing at the moment.
Hey, you make a very good point. We tell people this all the time because it is contrary to popular belief. Oh, if I have fun, I could just endlessly raise. I don't have to wait for the deal to come across my desk. But
You don't
your
have a sense of
investors don't
urgency.
know. Yeah, your investors don't know what deals are in there if it's a blind pool fund, right? They don't know what deals are in there, and maybe they don't like one of those deals, even if you do pitch decks for all of them, which isn't common. They might not like one, so now they're no longer interested in the fund. You make a really good point. While it is easier to raise money because you don't have a window that's closing, you mentioned it just now, there's no urgency. They can invest whenever, right? And so, because no skin off my back, we do fund of funds and we raise similar to a syndication. We raise in a 45-day window. So we still have that urgency. It's not an open blind pool fund. So I like that feedback from you because some people just have the mindset of, oh, I'm going to open a fund. I'm going to raise as much money as I want. But it's not always that clean, which is why some people prefer to stick with syndications, which is totally valid. Awesome. And so we're in a really weird time right now. Got the economy, wars, and gas prices. Everything is crazy in 2026. But I'm curious, what are your predictions for the market and what's going to happen the rest of this year and in 27? And how are you preparing to kind of thrive in that landscape?
Oh, predicting the future. Okay.
Everyone's favorite question.
We'll see how well this ages here. Okay, so I think right now is a really good time to buy. The banks are taking properties back. I've had a lot of conversations directly with the lenders, and it's really interesting because you think you're dealing with a decision maker, and he's like, oh, okay, let me have you talk to my boss. Then you think you're talking to the decision maker, and then you talk to his, you go from like a vice president to a regional vice president to the president of investments, and then you talk to the senior vice president or whatever. It's been interesting because both agency and the bridge market and some of the other lenders, they have been kicking the can down the road for so long, and now they're starting to take properties back. There's been a lot of operators get lazy. A few years ago, you could buy a property, do nothing to it, and sell it a year or two later, and everybody gets a 20 IRR or higher to investors. And for a long time, you didn't even have to be a good operator. It
Mhm.
was like everybody was making money no matter what they did. And so now that the market we've seen some declining rents in some markets, oversupply, increasing interest rates, there are some really interesting opportunities out there. And a lot of people are pencils down because they're just waiting. And I think that once you see a few things move, I think once you see that rents start increasing more than a certain amount, then you're going to have all this capital rush back in. And I don't think it's going to be like buying in 2020 again, but I think that we're going to see that 2026 was a really fantastic time to buy. Not that you're going to necessarily make money selling like next year, but I think 26, 27, as we see more absorption, there's already a lot of markets that are absorbing more than they're building. So yeah, I guess my prediction, if you had to pin me down, would be this is a really good time to buy. And I think people will do well. And a lot of people will be kicking themselves because they didn't buy more during this time.
Yeah,
I've got,
I agree.
yeah, I had several.
Go ahead.
Yes, I've had several deals where I put in an offer like, you know what, I don't even want the deal. I'm going to give them this offer. And that happened 6 months ago. I got a call last week and they're like, hey, are you still interested? I'm like, it's got to come down $500,000. But the price I gave them 6 months ago was the I don't want it price, but if you give me this price, I'd be an idiot not to take it. And now I'm like, all right, I'll take it $500, 500,000 less than the insane offer I gave you 6 months ago. And so I think there's just some really good, there's a lot of bad deals still out there too, but you got to weed through those. But there's a lot of people that really need to sell. And so we're trying to pick through and find those.
Yeah, the market goes in cycles. We had a very long, very unorthodox long period of growth in multifamily. It came back down, and what 10, 12 years, depending on how you look at it, of just growth, it was bound to stop. And now we're seeing, like you mentioned, there's still some really bad deals out there. But if you do things conservatively and you take your time, there's so many people with their pencils down on the sideline that there's a lot of opportunity if you're smart about it. And I think in 2 or 3 years, you'll see some people like you and others who I've had on the show who have answered similarly saying, hey, we're doing great, right? Because we bought at good prices and we did our due diligence. And then others who are still waiting, right? And sometimes you can wait too long. So I like that answer. But hey, we won't hold you to it, so don't worry about it. No matter how
Okay,
it
good.
ages, it's good advice. I think it's good advice nonetheless. I know that you don't do a ton of marketing and you don't have a ton of systems, but I'm curious if you have any favorite tools or resources you use, like syndication software, portals you use that you recommend other people take advantage of as well, or services, vendors, anything like that.
Yeah, so I think when you're starting out, you're just at the mercy of whoever the lead sponsor is. But if you have a choice, I like Cashflow Portal is to it's just easier to use. But I've got so many investors already in the system in Syndication Pro, which is now Sponsor Cloud, that I use both of them. But yeah, I don't, unfortunately, I don't have any sophisticated tools and secrets of the trade that I can share.
Yeah, no worries. We've used both Adrian and Perry with Cashflow Portal, they're great, and then Sterling and Jacob with Syndication, formerly Syndication Pro now, Sponsor Cloud. We use them for a lot of our funds and stuff, so I can recommend Sponsor Cloud.
Yeah. And I'm doing a
But
little bit of
they're
like
both
AI. I'm doing a little bit of AI underwriting with Claude, and that's a time saver, but yeah.
absolutely very cool. Hey, you don't have to have a million softwares to be successful, right? Sometimes you can overload yourself even. So not the worst thing in the world. So I'm curious, if you could go back, restart your real estate investing journey, what would you do differently, if anything? And buying Bitcoin is not an answer.
How about NVIDIA and SpaceX?
Yeah, that one, Nvidia is right there.
So I think I would have loved to have gone bigger, gone all in faster. I dipped my toe in the
Hmm.
water for a while. Back in after the '09 crash, I was being so cautious that I would only buy properties when I had the cash to buy it, to buy a property cash. And so I was just buying two or three properties a year. And while I had my trucking business, but I guess I wish I just started earlier. They say the best time to plant a tree is 20 years ago. Next best time is right now. I wish I could have just gotten in earlier to where I could have, by the time the 07 '09 crash came along, I could have just been like, okay, let me buy a few thousand multifamily units and two for, $10 to $20,000 a door in Midtown Atlanta or something. So I guess I wish I had gotten started earlier, and I wish I had gone straight to the big leagues instead of flipping houses. Just go straight to the 100 plus multifamily units.
Yeah, that's a common answer. Obviously, starting earlier is what everyone says, but going bigger faster is something I hear often to that question. Because why do 20 units when 200 units is essentially the same? It's just more moving parts, which is harder, obviously, but your ROI on your time, and you're not spending that much more time on a 200 unit than a 20 unit in terms of paperwork and due diligence. It's just higher number.
Yeah. Yeah, and having done both, and I still have some of my smaller properties, but it's easier to manage the 200 plus units than it is the 4 unit or the 27 unit or the 10 unit because you're making every decision on every AC that goes out, on every refrigerator that's not working right. You're making all these decisions for these little bitty things, whereas on the 200 plus unit, you've got a license you got a couple of licensed HVAC guys on your maintenance staff already. You've already got like a professional SEO. You've already got all these different on-site leasing. And so really once you've done both, you'll realize that wow, the 200 unit property is way easier than a 20 unit or a 40 unit or something.
Yeah, absolutely. I agree. And what advice would you give someone who aspires to get over 1,000 units, be able to raise $5, $10 million, 50 million in AUM, 100 million, like these numbers that we throw around, but they doubt their ability to achieve that goal? What advice would you give them?
You will win if you stay at it long enough. Most people quit, they quit before they reach success. And a lot of people have heard the true story about how the guy bought all this gold mining equipment, went out and mined for I guess a couple of years, and then he ended up giving up and he sold his equipment for pennies on the dollar. Somebody bought it, got himself an expert that could show him exactly where to drill. And it was right where the guy was drilling, and it was like 3 feet further. There's a lot of people that will get into this and they'll quit before they hit success. And if you'll just stick at it long enough, like you will absolutely be doing deals. You'll be getting GP, you'll be raising money, you'll be signing on the deals eventually if that's what you want to do. You'll be finding the deals, the brokers will be calling you. If you just stick at it long enough, like you'll do it. You just have to stick at it long enough. And I don't know if that's a year and maybe 3 years, maybe 5 years, maybe 10 years. But I think the results will be better than what you expect. It'll take more work than you expect, but like you'll absolutely do it if you stick with it long
Everyone,
enough.
if it was easy, everyone would do it, right? We'd have 300 people on this call instead of 30, which I think speaks to, all the people on this call. They probably wanted to quit at some time. I'm sure that someone had a deal that fell through and had a seller back out and you're like, man, why am I doing this? And you stuck through it, and that's why we're all still here. I really like that answer. You've been super generous with your knowledge and sharing your time with us. How can the audience give back or support you, and what's the best way for everyone to connect with you?
I'm always looking for somebody that wants to invest in one of my deals, or if you're looking for a great operator to raise for, I'd like to think that I'm that guy. So yeah, they can always welcome to reach out, email, phone, and go to my website, and I'll get an email if they go there, and which it needs to be updated. I've done a lot more deals than what's on my website, but I'll put my info in the chat again.
Yeah, put your LinkedIn, company, and email down there if you want to add anything else you can. But it's really good stuff and a really unique look at someone who started from single family and scaled up, and your take and your feedback on things I really like. I really like your mindset of how you approach the business, which right now is super important, right? Having someone who's disciplined to look at deals. I know that quite a few people would benefit from partnering with you and raising for some of your deals. So I really appreciate your time and thank you for coming on the show today.
Yeah, absolutely. And I just love talking to people. If you need some encouragement or somebody to tell you keep going, or if you want to, hey, I'm thinking about investing in this deal or I'm thinking about working with this partner, yeah, happy to get back however I can. Just to, yeah.
Absolutely. Awesome.